About the IT sector, now we had Latent View Analytics, which reported their numbers yesterday. Inline set of numbers that came in, obviously, versus what we're seeing with the estimates. But strong growth in Decision Point. Commentary seems exciting coming in from the con call as well. Now, today we're joined by the management of the company. We have Rajan Sethuraman, who's the Chief Executive Officer at Latent View Analytics, joining in with us. Good afternoon, sir, and thank you so much for joining in with us on the show. Let's just start by talking about in terms of overall the growth outlook. I want to understand because overall the core business, that's the latent views business, that's seen a muted growth of 0.3%. I'm comparing this on a quarter-on-quarter basis, while Decision Point has seen a much stronger growth, obviously, 16% growth. I want to understand where will this growth go for Decision Point as well as the core business of the company? How is that going to be in FY26? And will Decision Point continue to grow at a faster pace right now?
Good afternoon. You are right. I mean, the core business on a rupee basis was a smaller percentage, but that has also been impacted by the stronger rupee vis-a-vis the dollar. In dollar terms, we did about close to 3%, 2.9% or so. So yeah, it's a tad lower than what we were imagining it to be at the start of the year. There were a couple of deals which were one-off projects that closed down, and some of the other larger deals have taken some time to fructify. But those deals have come through now, and we see that the second quarter we will not only catch up with what we lost out in the first quarter, but it will be better as well, right, in terms of the overall growth trajectory. Decision Point, if you remember, it has been impacted by the general sluggishness in the consumer goods sector last quarter. Last quarter, they were almost flat. But again, we see optimism and green shoots. We were able to close a few new wins in Europe as well as in the US. And we also see traction with the existing accounts that we are working with. More conversations happening with the CIO, CTO audience, slightly more integrated approaches also to transforming, not cutting across R&D, supply chain, and RGM. So we are expecting that the remainder of the year will continue to be a positive momentum for the consumer goods sector as well.
Okay. All right. So, for FY26, you've been quite positive in terms of your guidance, USD 18 to 19%, shooting towards 25% growth eventually. Where do you stand considering this quarter's performance?
So as I said, while this quarter the core business was a tad lower, we are already seeing a revival in the second quarter. I mean, some of the deals which we were expecting to close prior to the start of this quarter or early in the quarter, they have been a bit delayed. But we see a much stronger comeback in quarter two. I mean, our quarter two projections internally, what we have at this time, based on the numbers that we see, are quite high. And it is in line not only with the 18-19% guidance that we had given earlier, but if things continue in this trajectory, we should be able to go past the 20 number. Now, I don't want to put out a number at this time because we do want to make sure that things come through in this quarter. But overall, in terms of the guidance that we gave earlier, absolutely no concern. And hitting the 18-19%, we should really go past the 20, right, based on what we see.
Okay, so just to reiterate, 18 to 19% is what you're sticking by for FY26. You think that there's a chance that you could probably go to 20%?
Yeah, go past the 20% number based on what we see. Yeah.
So, you did allude to the deal. The deal and the delay, I suppose, is on account of the acquisition of Decision Point Analytics. That was delayed. Has that come through? The street is worried that if that does not come through, then what? Can you give us a sense on that?
Sorry, I didn't get your question. Are you talking about the acquisition of Decision Point Analytics? Or?
That is correct.
No, I mean, the acquisition has been completed last year, right? I mean, we got 70% then, and we acquired a further 10% at the end of the first year. There is an earn-out plan in place, and therefore we'll be looking at this year as well, right, in terms of completing the transaction and getting 100% ownership of the company. But otherwise, we are already working well together, right, and starting to get the synergy benefits as well of having not only the people from Decision Point, but also the capabilities and the solutions that they have brought to the table.
And what about the margins? You spoke about the synergy benefits and you completing the deal, integrating everything. Just wanted to understand on a combined basis, what proportion of synergies have you realized already? What's your margin target for this year and next?
So the synergy benefits from a go-to-market perspective, they are falling in place. I mean, I would say that we are about 80% there. On the corporate functions, we believe that there is more that could potentially be done. That should give us a kicker on the margin front as well. Overall, as a combined business between Decision Point and Latent View Analytics for the year, we are still fairly in range for a 23% kind of a margin number.
Okay. Also could you talk to us about your different segments, right? Like you said last time also you had mentioned that consumer side, the consumer sector was not doing well and that's why some bit of a delay. Now we're highlighting green shoots. So how much of a recovery could we expect in terms over there? Also BFSI sector, that is, contribution is quite considerably good now, 12% that is coming in from BFSI. You wanted to grow at 40% as well. That's what you mentioned in your con call. So I want to understand what will drive the growth in BFSI? Which part? Is it going to be fintech, payments, AMCs? Where are you seeing good traction?
All right, yeah. So firstly, on the consumer goods, as I said, we are seeing traction in terms of taking a more integrated approach across R&D, RGM, and supply chain. And those are the type of conversations that we are enabling. There is good traction on the generative AI front as well. I mean, one of the deals that we won in this quarter was completely on the back of using generative AI capabilities for creating content, not just the text content, but also the audiovisual content that goes into the direct-to-consumer platform, right, of an innerwear apparel company that we are working with. And this is also gaining a lot more traction with Databricks, who's our partner. So we are expecting that we'll be able to take a more integrated, holistic offering into the consumer goods business. When it comes to BFSI, we have seen an uptick in the payments, in the fintech space, rather than in the banking and the insurance. There are a couple of accounts that we have started working with in the banking and insurance space, but we will probably need another 6 months to see a bigger uptick, right, in terms of the size of the deals that we are doing. So early starts there. A lot of the growth that is happening today being driven on the fintech side.
Okay. Also, just one more point. US, 89% of your revenue is obviously from US. You have spoken about, increasing Europe in terms of the size, but still, it's not that much of a proportion that comes in from Europe. So what are the plans for expanding further in Europe? Any strategies that you have? Any acquisitions over there as well?
So Europe has been a bit of a challenge for us. I mean, we have tried a few things. More recently, when I say recently, in the last 6 months, we did take a call that we will just focus on 2 sectors, consumer goods and banking financial services. The green shoots that we are seeing in consumer goods, as well as the growth anticipated in the banking financial sector, there are accounts that we are working with in Europe as well. So therefore, Europe should be a part of the growth story. We had an earlier target of 10% plus in a 2-year time frame. I would want to wait a couple more quarters to see whether we are able to get to that kind of a number in terms of a projection 2 years out. But Europe is looking good. There is also traction in the Latin American market, right, that we are witnessing. One important lever of growth in both these markets would be to partner with consulting firms who do management consulting and strategy consulting work. There are a few conversations that are underway, and I'll be able to share an update maybe after this quarter's results. But the intent is partner with boutique consulting firms who are doing the upfront business strategy consulting, and can we come in as the data analytics partner, right, to grow these markets?
Okay, all right. So we're going to leave it on that note. Always a pleasure. Thanks very much for joining in and speaking with us. So that is Latent View. The stock is up around 4% at this point in time. They are confident in terms of the guidance of around 18 to 19% growth for FY26, possibly even shooting above 20%, and margins of around 23%. We'll take a short break, but before that, now it's time to recognize the champions. Get ready for an evening that honors India's most promising SMEs, the champions behind our nation's remarkable progress. From groundbreaking innovation to grassroots impact, these businesses have powered growth, inspired change, and redefined ambition. HSBC presents CNBC-TV18 SME Champion Award Season 2. India's most coveted SME award platform is all set to finally announce the winners on 25th July, 3 p.m. onwards.